Hello.
I forgot to hit the join button. I was sitting here looking at the screen, just looking at myself.
Um,
I just sent my links out so they'd be
yeah,
good.
we can wait for a little bit here and just have a chat. What's going on? Happy New Year.
Yeah, you too, man. Things are good. It's going to be a great year. My goal is to double my business this year.
Well, the world is becoming more and more and more analytical. So, the service you provide, I got to jump up and shut my door. The service you're providing is extremely valuable. In fact, one of the things I want to talk about a little bit today is a spot to get some more of that data, which is the Commitment of Traders report from the CFTC regarding lumber futures. And I know I'm a natural skeptic when I hear someone talking about data and, this or that. I'm like, well, where'd you get that news from? Or where's that information from? This is one where
there's lots of opinions just flying around.
Right. There's opinions and then there's information. I remember I was at a conference once. It was actually the Montreal Wood Convention. And there was an analyst up there pontificating. And he said, yeah, field inventories are very low right now. And I was like, okay. I was honestly curious. How do you collect that data? How do you know?
That's a lot of numbers, a lot of spaces.
And he couldn't answer it.
Yeah, it's impossible. I mean, it's just, you got to clarify the people that I've talked to, field inventories are low.
Yes, exactly.
And that was 8 people out of 30,000.
Hey, you know what? That's a really interesting question. How many entities do you think maintain an inventory of lumber?
It's interesting you could ask that. I just bought a mailing list or access to a mailing list that has like 15 million names in it, but I get to pick 15,000 names out for the price point that I've picked. There were 37,000 locations, with excluding Home Depot and Lowe's, 37,000 locations in the U.S. and Canada that were lumber yards or builders. So I can have that data for you probably next week, but I'm gonna be able to sort that list, and it's pretty current. They scrape emails every day, and the way they do it is they pick emails off of signature blocks. So somehow or another, this company's able, and Ashley knows them. You guys know who they are, but they're able to go in and get into emails and scrape their current information off of it within the last couple of days, and that sounds a little shady to me, but that's.
Yeah, I mean, look, the whole market or environment around data can be shady. It's so valuable if it's organized properly, collected, properly.
Well, part of my reason for doing this is that's what I want to create. That I want to make that available. I want to create a good, strong, big numbered mailing list with. I'll tell you, Mike. For my entire career, I've always sought to find out who's the. There's got something else. There's always been. If I lost my train of thought, I got an email. A guy saying you're doing the show.
What you're talking about is a network, and the term network, what it meant in 1980 was your personal network of who you communicated with over the phone.
Yeah, your book, your little Rolodex.
And 1980, we didn't even have the fax machine yet, right? So it literally was your phone. You fast forward to 1990, and you've got a fax. So now your network kind of expanded a little bit. Obviously, we can go through time and talk about email and everything, but you look at the ability today to create networks and transfer data and transfer information. It's really remarkable.
What seems, I found this kind of interesting, that just when you just said that, it made me think of something that's why the phenomenon was what it was. I've been holding these little round table groups for Inner Circle and some builders and component manufacturers, just separate groups of groups of interactions of people that are mixed from all over the place and different fields, and just kind of see like what happens when you get these people together, and will they come together? Will guys from the same industry and buyers and CEOs or whatever, will they come together, and what will happen when they get there? And what I found is the more they do it, the more they get comfortable with doing it, the more people like the idea of sharing openly with other people face to face, because there's just so little of that happening.
I agree. I think that you're seeing in Instagram, TikTok, all of these platforms for sharing a video, it's more interactive. And now, obviously, the pandemic has brought live streaming, Zoom calls. We still
think about that. Like, if you're looking for some hot information, something that's pertinent, would you rather hear it from a small group of 8 people or something that's had 1.4 million views?
Yeah.
So there's a downside to using, like, okay, anything that you read off social media isn't going to be timely, and it isn't going to be exclusively for you. It's going to be for the world to see in a second or two.
Yep. Yeah, that's true. I mean, and I guess for a price, you probably can join a exclusive group and get exclusive information. But once that information's put into the world, it can be sent anywhere.
Yeah, I'm doing it because it gives me more information. I get 6 or 8 guys talking to each other about what's going on in Dallas and Oklahoma and Kentucky and Washington and Vermont. And, you hear different people say, like, my business is good because I do custom build resort kind of things, or my business is good because I do single family starter homes, that kind of thing. It's just like, or mine's bad because I'm doing whatever it is. But you hear once you hear what everybody has to say, there's a reason why their situation is unique to what it is. And once they hear, like, say, well, this one guy says, I'm real busy up here because we don't have a lot of land. People are moving out of Boston to come over here for, getting out of town, that kind of thing. So that's not the same as, moving to Dallas to move your family, get a job and get a school and neighborhood and that kind of thing. So you got to kind of take everything out of context or in context of what it is, but it's been very helpful.
Well, we've got quite a few on. Let's kick this off. Welcome everybody to Lunch with Lumbermen. Mike Wisniewski. I'm filling in for Ashley Buchholz, who got pulled into a meeting real quick. Matt, let's take a look at your forecast. It's from last week, Thursday, which is
today.
Today?
Yeah, we've changed this is going to be kind of good for Lunch with Lumbermen, because I've changed my production schedule to put out on Friday. My deadline's by 10 o'clock on Friday, so we can publish by noon on Friday. So all the things we talk about today are going to be most of the stuff that I write about in an hour.
Okay.
It's going to be.
Well, here, let's share. I think I really enjoy looking through your first page of your report. First, I got a question. Who's Jerica Harris?
Jerica is my publisher. She's been writing Another Dimension. I happen to write that piece, but she's been writing about the rail stuff and that kind of thing. So she's
I got you.
Getting her writing legs under her.
You know what? You cover in this first section here just human behavior, and the one thing that's not going to change is human behavior. We just do things because we do them, and that's a lot of the structure of your analysis is repetitive type reactions to markets. But the one thing that really stuck out at me was the last paragraph. You kind of were talking about the market's a little pre-bought, which, yeah, there's no doubt. Anyone that has business on the books from 3, 4, 5 months ago is able to buy in and have a really, really nice margin. So are we pre-bought? Yeah, but we're buying at prices that could be losses for the producers. And historically, this Doesn't last that long.
Yeah, and are likely going to be losses if the guys don't cover them. They're going to be losses for them when they do get around to cover if they don't do them now. That's why I got a buddy that says he worked for a builder. He was had a little nepotism deal with a builder back in the, gosh, I think it was in the 80s. It was a good 20, 30 years ago. And he called me. I don't know how he got hold of my name, but he called me and he said, I don't know anything about lumber. I want you to, tell me what how to do this. I've been tasked with trying to reduce my lumber costs for this big builder. They build about 20,000 homes a year. And he said, just go figure it out. So he called me and we hooked up and I basically kind of gave him some future strategy to use. He took delivery of 125 cars of futures contracts. And he said, the conductor called him one day and said, where do you want these 125 cars to go? What spur do you want to put it on? And what he said was, hang on, I'll call you back. So he called me. He said, what's a spur?
Yeah, that's a problem.
So he said he went out in the yard and he looked at the track. He said, as far as he could see, there were 125 cars back to back waiting in Memphis to get put someplace, or Nashville or wherever it was at the time. But
that's a little bit of demurrage. Whoops.
Yeah.
All right. So January over before it begins. What do you mean here? What's going on?
Last year I started referring to January as January chaos, and this is a great example of January chaos. Because if you think about what's really going on, I had a phone call this morning with a builder that was telling me, as I told you about, he said that their projection for the year was that they would do 60% of the starts they did last year. They built about 1,000 homes a year, so they're planning on doing about 600. And he said, honestly, I think that's too aggressive. He said, I think we'll do about 40%. He said, if we keep doing in the first 4 quarters of 2023, like the fourth quarter of 2022, he said, we'll do 40% of what we did in 2022. He said we're just off so much right now. So the projections are coming in. I've heard from multiple places just this week that say that they're going to be down anywhere from 40 to 60%. And that's, to me, that's what the market's been waiting on. The building supplies want to know, just give me something to go on. So yeah. The builders are finally throwing numbers out there going, okay, I hate to tell you, but the best case scenarios looks like we're going to be off 40%. And 2 weeks ago, that number was like 20%. So whether it happens, like you would send me that text, said, what if we have more starts or less starts, or something. We know one thing's for sure: things are not going to stay just like they are.
Of course.
And the way that we're on that teetering edge of mills losing money and having to make some curtailments, and so you think, well, if you're a mill, how much do you curtail? How do you figure out how much to curtail so that you're still not out producing the market and just you're pumping out wood at a loss? Or do you close the mill, curtail the mill? What do you do? But so you go to the source of the information, which is going to be the builders, that they're going to be giving the information to the building suppliers, building supply yards. And they're just now getting this information that it's going to look nasty. They're expecting this year to be completely broken all year long. And if housing starts are off, let's say it goes to 700 from the 1.4, or let's say we started from 1.7, let's say it goes to, 850 or something like that. That's still pretty catastrophic. Is the mill side, is the production side prepared to make a 40% reduction in production or supply to equalize what that's going to be? And I don't see that happening right out of the chute. I think the mills are going to, I've heard conversations today of mills that they're in conversations of which mills are we going to shut down, which mills are we going to curtail at. It's the conversation, the rhetoric is accelerating. And I think we've got, probably before this month is over, we're going to see some pretty significant historical curtailments and and production cutbacks just because it's kind of like the Fed chasing the interest rates. The mills are chasing this thing down. They're chasing the demand down.
So I know West Fraser just announced permanent closure of a sawmill in Florida.
It wasn't permanent. It was closed, but it wasn't permanent.
Oh, okay.
But if you think about, let me tell you about that mill. That mill, not to be brash about it, but it's a garbage 2x4 mill.
Okay.
And it ships lumber to Florida because it's too far south to ship north. So for it to ship north, it has to be $20 a thousand cheaper to be competitive with wood that's in central Georgia, northern Alabama, central Alabama, that kind of thing. So they're at a freight disadvantage. So they're making a product that goes to Florida, which is pretty much central and southern Florida, and it's not particularly known for quality. It never has been known for quality. And there's several mills that are around. And one, I think Bender Holtz, for example, who trades on the platform with you guys sometimes, they got a brand new mill down in that same neck of the woods capable of cranking out 500 million feet a year. And, there is a good product, and not that one's better than the other, but things are better than the others. But that was a kind of that was like shooting the guy that was a wounded soldier that was on his last breath anyway.
And well, those are the first ones to go down, obviously, right? You take offline your highest cost mills.
We're to the point now. I just was talking some numbers a little while ago with a guy, and he said that we've taken about 1.2 billion feet of SPF, British Columbia, Western SPF off the market over the last couple of years anyway, whatever you call it. And it looks like there's plans for another 1.2 billion to come off this year, probably first half of this year, but just because of market conditions and fiber supply and all that kind of thing. But the estimation is that we need another, if we're going to have a 60, 40, 50, whatever percent reduction in housing starts, just single family, that estimations are that we need about 4 billion feet of lost production, which means that take another 1.2 out of British Columbia, 3 billion feet needs to come out of somewhere for this market to not be oversupplied. Now, granted, I'm repeating data from other people that have done their studies, either in-house studies that from major producers, particularly, and builders, and that's kind of those are the general numbers they're throwing around. And so, my question is, what are the mills going to do? Are they going to get in front of it and stop it so that it makes prices rise, or they're just going to try to get level with it so that prices stay the same, or do they not catch up with it and prices fall? So to me, the market's particularly dangerous at this point because we have major decisions that are in the process of being made, that are going to be made and revealed in probably the next 2 to 3 weeks. That's going to significantly impact the market. Either we get the announcements of big curtailments and the market starts to take off, or we don't and we stay flat and mushy.
What about the logs? Like in the South, for instance, for sure, log supply, it's the lowest cost region, right?
Yeah, it is going up a little bit though in the South. It's still.
How does the log prices go up when the lumber market is getting crushed? That doesn't compute for me. I don't understand.
I think it's the 80% of the timber land or tree farms in the South are owned by private landowners and investors and that kind of thing. But so much of this product has been passed down from generation to generation. A lot of these families own this timber, and they don't have anything in it other than taxes. So they got to sell some to pay taxes or property taxes, and that kind of happens. That could be what's going on with this time of year. But there's still an oversupply of the products. I think it's just in pockets where some of these new mills have popped up, and some of these rebought mills have revamped and increased their production by 25% or so. Is just a bigger demand. But I think it's a kind of a delayed reaction from when prices got to be $1,500 that these guys, the southern timber holders, just were kind of taking advantage of it. They could get it, but I don't know that we're still in I think it's $300 some per cubic meter for saw timber in the South.
All right, let's jump into the report here. What you said just does make sense. It's interesting. You look at the market, and we're sitting here on a week-to-week basis. The builders, maybe they're at a 6-month basis. The sawmills are looking at stuff on maybe a 2-year time horizon, right? And then the timberland owners, they're on 5, 10, 15-year horizon when they can cut logs.
Yeah.
Right? So
and the guys that are handling the most of the product are thinking inside 6 weeks.
Yeah, exactly. All right. So what are we looking at here? We got basically half of last year is the blue line as we see it. And it appears
now we are well past that week number 46 was actually rather than a reversal, was an acceleration lower, which is very, very rare, especially when you're at the bottom end of the market. It just seems like we're just pushing ourselves to find out where the bottom is. I think your headline was, has the market bottomed out yet? And from a price perspective, from a cost value, ROI point of view, this market should be bottoming, and it should be bottoming even in Southern Pine. It's still there's just, I mean, you can't run. You're making money, but they're not making the windfalls that they were, back at $500, $600, $800. So
yeah, I knew the market was weak when we have those holiday weeks basically coming up to Christmas and then Christmas to New Year's, and in strong markets historically those have been busy weeks. This year it was so quiet. Then we came back and I thought, okay, we're gonna be busy right out of the gates here because we were quiet for the last 2 weeks.
Yeah, it didn't happen.
It was like
more of the same. It's like nobody took a breath.
Right. So, finally this week, I think we're seeing a little bit, but we're waiting for this thing to turn. We're coming up on the next decision point, which is kind of a topping point.
It should be a reversal low. So my expectations of the market, the way things are going right now, there's been a tremendous amount of short covering in the last 2 weeks, just a horde of it. And those guys that were short covering are probably rolling into long positions. So what I want to see is how's the market at the end of this week after getting a surge of short covering and a little bit of light speculative buying. The market's clearly better today than it was a week ago, 2 weeks ago. But it doesn't feel like it's running away. There's still product to get. It's a little difficult, but nobody's panicking saying, there's nothing out there anymore. There's no 2x6s to be had in the whole continent, and that kind of thing's not happening. People are getting stuff covered. Even the big, large contractor yards are buying. The treaters are buying. Everybody's getting a little bit, but they're buying. You got to keep in mind what they're buying for is that customer that says their business is going to be off 50%. So,
well, that's interesting. And you say that the snapshot here, market participants are ready for improvement. The Fed is not. That's as simple and well stated as it could be. We had a CPI number come out today, and it was spot on what all the analysts thought it would be. The stock market broke,
down,
rallied,
up 200, down. Yeah, it was all over the place. It was like 300-point range. Just like you turn your head, you go, that's another 100-point change going the other direction.
I'm looking at it now. We just went right back up to the highs, and now we've rolled over again. It's you're in a range trade right there. That's the classic.
You know what? In the lumber market, Mike, is in the very same situation. It's the builders are saying, unlike 2021 when they said whatever you do, don't run out of lumber for me. What they're saying right now is whatever you do, don't buy so much lumber that you expect me to take it from you. They're telling you you're not going to have as much.
Do you remember when $1,000 a thousand was going to be the floor? The new normal?
Right. And when at that time, I bet you couldn't have found 3 people out of 100 who thought the market would go back to $400 or $300.
And people were like, do you have extra wood? Yeah, I got like maybe 10% extra at $1,200 a thousand. Now we're at $350. And how much extra wood do you have in? Yeah, I'm running it pretty lean.
Yeah, not really. All I got, everybody, the answer's the same. It's all sold. I'm just sitting on it waiting to ship it.
Let's chat about weather real quick. Some weird stuff happening in California. I think this has potential to be a little black swan if that coastal range of mountains continues to get pounded with snow. Maybe the log decks are a little later to get replenished. They're having some pretty tough weather out there. That's for sure.
Think about the northern half of California. What are those job sites like?
Well, when I think of northern half of California, I think of Sierra Pacific, and I think about how much production they have right there.
Yeah,
but yeah, it's like.
But you gotta believe that the job sites have to be just impassable. So
for sure,
whatever was going on, that wood in Northern California on the lumber yards ain't going anywhere.
No, absolutely. The whole
probably not getting much either. But
yeah, that whole West Coast is pretty messed up. All right, what's the 6x10 historical trends bullish? But we just looked at that chart. It's the loss.
Yeah, it kind of shows you what the historically we usually get a couple of weeks of a little fill-in buying or first of the year buying in January, and then January finishes the back half week, and then we get a little run up in February, and that's another round of replenishing for spring. But you don't normally. I'm trying to remember time. I don't ever remember a time, Mike, when my expectation for the next year was going to be half of what it was the year before. Not even 25%. Just never had a market that said it's going to be off 25%. Maybe it did, but I never went into the year expecting that was going to happen based on the information that I had at the time. But this is a very unique situation. It's
Yeah. So curtailments, we're seeing a few here and there. Interfor, obviously the West Fraser. I think Canfor announced they were continuing. I saw Canfor announce something about a pulp curtailment.
Yeah, pulp mill that may affect 3 sawmills, the way I understand it.
They're trickling in. I think what's going to happen, there'll be the one straw that breaks the camel's back eventually. But there's no wholesale curtailment happening, or at least being announced yet.
And I just talked to a guy about a mill sales guy about that, and he said there's nothing on the immediate table that's getting ready to be announced, but everybody's talking about it. The mill in the South, the mills are talking about it because they know they've got to do something, or they're going to be $180 2x4s in a couple of weeks.
Housing data, as you say, as I expected, year-end completions are outpacing starts. Something that surprised me in the jobs number that just came out, construction employment was up, and it kind of after I thought about it, it makes sense. The builders have these unfinished homes, and all of a sudden they can get all the materials they need and labor. People are getting laid off on another job, they can come over here. So it doesn't surprise me to see a pickup in the labor or the number of jobs in construction, and it doesn't surprise me to see the houses are getting completed.
I'm hearing also that the wages for those framers, for example, and contractors, just the framers specifically, the wages are going down because the guys are saying that the home builders are saying, like, it's getting ready to get ugly. I'm not going to be able to keep you. So we're right on the edge of there's not a shortage of labor, but there's not an abundance of labor. But looking down the road, they're telling the contractors, like, it's not going to be this good the rest of the year. Some of you guys are going to get laid off. So I'm seeing contractors builders talk about their framers are shopping around for work other places and kind of leaving them, going for some places promising a better tenure.
Have you ever seen this number way down here? Producers have inventory. It's sitting there, right?
These two arrows should be right. They should be going together with each other. So as we get to an overbought condition, we should be going to an oversold condition as the inventory just shifts from the supplier to the buyer. But that's not happening because the market's just overproduced, and dealers are able to build their inventory a little bit, and still at the same time the mill inventories are building. So, and I think that's kind of been a reality or realization that the mills have come to, that like we're just losing ground on this thing. They got to do something about it.
We got much going on in volatility. It's just kind of a grind down, right?
Well, it's percentage wise, it's still kind of the same. You look at $400 lumber at 10% volatility. The week's $40.
Yeah.
Yeah, 5%'s $20. That's not unrealistic. So that's not a lot of volatility. It's just the thing that's kind of to be aware of is like over the course of take a bigger period of time, like for right now, for 6 months out, what's likely to happen? Are prices going to go up and down 3 times for $40 a move? Or are they going to go steady climb for 3 months for $100 and steady down for $100? But I don't think that the volatility is not going to seem like it's very much just because prices are less. But percentage wise, it's going to move.
So it appears as though you are a long range bull on the market. I mean, we're talking doom and gloom for the market, but I guess what we're talking about is the inevitable is, the supply needs the right size to the perceived demand, and that creates the opportunity for a bull market.
Yeah, at some point, but there's just so much. You just look at that FDP chart there, and you go like, we got to go through that. Not to those extremes, but we've got to go through the January chaos of not knowing really what's going on, and that's what we're seeing right now. Just imagine these lines just on top of each other instead of separated. But we got this up, down, hard again, then back up again. It's still going to do the cycles. It's just we're talking about different money, different values, different sizes of inventory, but it's still going to do the same thing. It's still going to, between now and spring, regardless of how big spring is, spring's going to be bigger than the way people are prepared for it for right now.
Makes sense.
They're prepared for more of the fourth quarter of 2022, and that doesn't include the spring of 2023.
What do you got circled here?
I don't know. I can't get it off.
That's fun.
I drew it on there about a month ago, and I can't get it off. I was showing it. The difference is how to read how to glance at it and see what the forecast was going to be for the 6x10s.
So same story here in SPF and Euro.
Yep.
Now the one thing I can add here, I talked about it on Tuesday. The imported wood into the U.S. We imported more wood from almost everyone except for Canada. Canada was the only place that went down, and it just shows the European SPF has quite a foothold here in the U.S.
Yeah, and my understanding is there's an armada of boats on the way, so there's a bunch coming in the next couple of weeks.
It would not shock me. U.S. dry fur, kind of the same story.
It's still, as much as production has been cut out of Canada, and still the Western U.S. market follows Western SPF. That's just the long and the short of it is it's the Western Canada is still the dog wagging the tail, which is Western U.S., which is a bigger market than the Western Canada. I mean, they make more wood than Western Canada, but they still they still respond to how the Canadians go.
Gotcha. Green. Now this has got to be an interesting one because that green is used up in Northern California.
Yeah, it's used all the way down into Oklahoma. I mean, it goes to, you get down to, I've got one dealer in Oklahoma, and I mean, he's just near the Texas border, but he uses exclusively green Doug fir, and it works for him. But those things that green Doug fir is cheap. I mean, compared to everything else, it's you can buy, last week you could buy green Doug fir for 2x4s for $250.
Wow.
And those kind of numbers, you just got to put it in there and just wait for it to ripen up.
OSB. Look at this.
I don't see that happening. That's some serious panic buying, and what that represents right there is a real incorrect placement of where the contract should be. Home Depot had too many contracts. That's why that happened. And because the mills were able to just keep loading Home Depot up and keep their prices up and just keep the reloads of their distribution centers full. So you never really knew how much there was. But that's why Home Depot was like, everybody said, well, how can Home Depot sell for $20 a thousand cheaper than the mill is? Well, they've got it. They own it $60 a thousand cheaper than that. So
yeah, exactly. Yeah, I think there's going to need to be some right sizing on OSB here as well.
Yeah, and it seems to be happening, but that's going to require some panic buying somewhere, and which usually happens from better expectations of demand than what we've got right now.
All right, what about the framing package index? Are we seeing some deflation here? I would guess, right?
Yeah, but that thing's down to less than I took where it says 2.8 on the bottom there, the builder replacement cost and the dealer replacement cost, where it says $8. That's actually, those are rounded numbers. It's actually like 8.4 for the first one and 7.6 for the second one. So
you compare it back to March here, it's 33.
Yeah, just from this year, we're down 75%. It's ridiculous.
I got a buddy who's building a house, and they're just buying the lumber now. And I said, listen, man, you better make sure you reprice. If you're not locked in, you better get your builder to reprice it, because it is definitely less expensive.
The builder was telling me this morning that he said his sales are down by, they're expected, the same guy said he expects sales down to be about 60-50%. He said, why is my lumber price not down 50-60%? And he said, I look at the prices and see that we've been at $1,600 earlier in the year. We're down to $350-400 right now. How come I'm not getting those kind of price cuts? And I says, because you don't get to buy that number at the bottom or have to pay that number at the top. It's usually an average, like 6-8 week average of whatever the inventory is, plus some kind of fear factor. So when it was $1,600, people had lower priced inventory that they didn't have to price it at $1,600, but they priced it on the higher end of their average price because they feared higher prices.
Yep.
And now they're doing the same thing. They're pricing on the higher end of their average prices because they fear production curtailments and higher prices again. So the area that the builder's working in is significantly off the top and the bottom. So that's kind of why you don't see the builders don't actually get to see they don't have to endure the top or experience the joy of the bottom either.
Yeah. Nothing really jumping out on the rail car shipments here. I think everything's moving pretty well.
Yeah. And so far, no news is good news.
Exactly. Yep. And I know trucks are quite inexpensive relative to where they were. What do we got? The black line here is 2022. We're definitely down. That's not bad.
Yeah, there's plenty. There's no shortage of trucks, and our diesel fuel still $4 a gallon or something. So it seems like here's what's amazing about that though. That at the height of the pandemic, when there was such a shortage of trucks and you couldn't get any, people were paying $10 a mile to get stuff moved, and that was a gouging. That was just plain old gouging, because when you can go back to $3 a mile just because there's a little more availability, it wasn't the cost of doing business, it was just the ability to do the business.
That's the beauty of the capital markets or the free markets. They will move to wherever it takes to.
Yeah, you might want to if you've got one, you might want to show a current futures graph.
Yeah, you know what? I can do that.
It doesn't look anything like that. This has been a huge.
Let's see if I can make this look a little bigger. All right, so here is.
We're at that. See that bottom red and blue bar at the bottom?
Oh, this is March.
Yeah, so is mine.
No, I think yours was January. No, I guess yours was March. Well, here's the big deal. This is March. And this will be January.
Yeah.
Now January expires tomorrow.
Friday. Yeah.
So essentially, this is a cash chart right now. what's happening, and this is something I really want to point out to everyone. You go to the March contract, and March is rallying. The price on this chart represents wood shipping in late March to early April. It's not today's wood. It's a different ball. If you're a mill, do you have the capacity to say, you know what, I'm just going to stack it up and let it sit here at the mill until March? Absolutely not.
No, not at $420. That's not a good bet. I would bet on something bigger than that. But what is that?
So this is the spread. This is the difference between.
It went from like 0 to 70.
It went from January trading $6 over on Thursday, December 22nd, to it traded $80 under today. Actually, the last trade was $80 under. So this is the same exact product, just two different time horizons.
Look at the 4 days. I mean, look what's happened just in 4 days. I mean, it started on like $15 a day for 3-4 days. And it was all March rallying, and basically January staying weaker and maybe flat, but it just March out rallied. I mean, to make that spread go up, that was basically March going higher.
It is. Yep. So, people are going to ask, well, why is March rallying? And you're going to hear, oh, the funds are short. The funds are short covering.
Yeah.
So if someone says that, you hear it and you're like, what does that really mean? And how do they know that the funds are short? So I'm going to show you, this is a little, what I would say, a nugget of gold. This is the Commodity Futures Trading Commission. This is a government agency that puts out data. You can get to this website. It's cftc.gov. On the website, you go to Market Data and Economic Analysis, and there is a section here called the Commitment of Traders. So the CFTC, because they are the watchdog of these markets, they want to make sure nothing funny is going on and that someone's not cornering the market. So if you're a big trader, if you have a large position, you have to report it to the CFTC, and they analyze like what percentage of the market you actually hold. So if you come down here and in the metals and others where lumber lies, I look at the short format. So then it brings you to this very spreadsheety looking page, and you got to scroll down.
It looks like a weather report for an airport.
Yep. So here's lumber, random length lumber, and it's divided into 4 sections. The producers, merchant, users, these are what they call commercials. So if you're a commercial hedger, you could even be a lumber dealer, could be in here. That would be buying futures for covering future business, or selling futures to hedge an inventory. Swap dealers, it's some sort of, it's like the banks who may be offering a financial hedge. It's not a very big segment, obviously. It's only 227. But managed money, these are straight up funds. Other reportables.
How many funds do you think are participating in lumber?
Well, the total number is right here, 14. So the total number of funds reporting in this managed money section is 14. Now, other reportables, these would be large independent traders. I've had to report into this as well. They break this out. You can be long, short, or spreading, which means you have a long and a short 2 months. Here's the big number: 1,815 contracts short. The funds, the managed money, and this is what's really important. It's 59, called the 60% of all the short open interest is being held by this managed money. And this is being held by the reportable managed money.
Is that 15% of, it's not 15%, 59% of the shorts, it's 59% of the whole contract. I mean,
59% of all the open interest.
All different. Yeah.
Now, they have a vested interest in making money. They don't have a vested interest in acquiring lumber. So what is happening here? I'll go back to this chart. Go back to the March. Well, actually, let's go back to January. January is at the lows of the contract lows, meaning if anyone who bought this January contract, unless you bought it at the last one, you are losing money. So the funds, I'm just going to go this way. The funds, they have parameters with which they want to exit their position, and nothing on this forced them to exit their position. They just kept riding it lower and lower and lower. They might have covered a little bit on some of these rallies, and then they were the ones selling back into it. They sit and they look at the economics and they go, the Fed's raising rates, housing starts are going down. There's too much wood going to be produced. It's pretty simple.
And it's in a basket of other commodities too, isn't it? Like copper or
yeah, definitely. There's some index type funds. Now, when we go to March, the one thing you do know is we're not going to zero, right? So at some point, the funds will get triggered to cover their position. And as we got down here, it looks like the trend could be broken. They're trend followers. As soon as the trend is broken, then they start to cover their position. And we saw yesterday the open interest dropped by 100 contracts in March, which is the contract that should be growing in open interest. So that was an indicator that the funds were covering. And what we'll see is not tomorrow, but a week from tomorrow, we'll get the data about what's happening in the market right now from the CFTC, because it's backward looking. And I think you'll see that the funds have been covering, but they got a lot more work to do.
I tell you what's interesting to add to what you're saying, Mike, is covering means they're getting out.
Yeah, they're exiting their positions.
They're not rolling there, which kind of means that their conviction for being short in the market is either they see something economically that they don't feel like the market's going to continue to feel under pressure for commodities, or maybe they think lumber's too cheap, or but for some reason the other they don't want to roll to May and be short in May from March, so they're just getting out. So their bearish conviction is waning,
and they have no tie to the lumber market. So yeah, they can leave lumber. They can go into coffee tomorrow. They can go into copper. They can go into oil. They saw an opportunity and they've capitalized on the opportunity. So when someone, there's a big deal going on. Like, you can buy cash lumber today and you can sell a futures, and theoretically over time, as we move to that March futures contract expiration, those two prices will come together. And the basis opportunity here is in the $50 to $70, $80 range. Yeah. So if you buy cash lumber at, let's just call it 400 delivered, call it 425 delivered Chicago, and you're selling a futures contract at $500 delivered Chicago, or more, I guess, probably 525. That's $100. That's a 20% return in 2 months. So that's what's happening today, and I know that because I've talked about.
I just thought about something you said that. On the new contract, you have to buy a carload equivalent of 4 truckloads and take it as a truckloads, but it's delivered as a carload to Chicago.
Oh, so now you're talking about the new contract.
Yeah, the new contract. So you have to take delivery. You have to do it in increments of 4 contracts to get a full, because they don't ship by trucks from the mill. They ship by rail to Chicago.
That's the way it's priced. But
that's the way it's priced.
But if you do an exchange for physical, if you do an EFP with another entity, you can do 1 truck at a time.
Can you do a car to other destinations other than, I guess you can, other than through Chicago? If you take delivery of it, you got to take it through Chicago.
Yes, exchange for physical. It can be.
It's just like a cash transaction.
It is a cash transaction.
Yeah.
It's a physical transaction. So, that there's a great opportunity coming up with this new contract where truckload buyers can be buying 1 and 2 contracts and do exchange for physicals with others. But I wanted to point this out, that there's going to be some nuances in the market here over the next couple of weeks that are going to be explained by, why is the futures market $70-$80 higher than the cash market? Well, it's because this entity in managed money has nothing to do with the cash market. Their only option is to exit themselves through the futures market, and they force the premium. Their activity forces a premium.
Yeah.
So I'm glad we could share that. We're rolling up. We had a long show today. I think that's about it. Let's stop sharing here. I think that, to kind of recap things, there's opportunities right now for sure. Definitely got to be careful, and there's going to be chaos. If you have to chase, I think you're going to get in trouble. But if you're opportunistic, you might be able to take advantage of, some good pricing.
Yeah, I think the key right now is to, like you just said, don't chase it and get yourself in a real burdensome inventory position. If you're in a better time to do that, it's going to be, maybe February or something like that. Once we get another sell off, and if we don't get that sell off, I still think you don't chase it, because the demand side says, based on where production is right now, we are oversupplied, and we've got a blip going on right now from short covering and a little bit of fill in, and it's not a major shift in the dynamics of supply and demand.
Absolutely. Shameless plug for our show on Tuesday on 3 different points. Number 1, Shane Soul just said, thanks for the info on futures. If anyone wants more info, reach out to me. I can talk you through stuff. Number 2 is watch our show on Tuesdays, which we talk about lumber futures. And on that show for the last 6 months, Greg Kuda, who we do the show with, has said this market is in control of the suppliers. It's up to them. Demand is not going to save them. Just what you said, Matt.
Yeah. It's kind of easy because the builders are screaming from the mountaintop what to do. They're saying, don't depend on us.
Yeah.
And we're not going to do what we've been doing. And so it's kind of, if you buy too much inventory, expecting your builder's going to do what he did last year, shame on you. They're warning you.
Yep. All right, let's wrap it up, Matt. Thanks. Hey, great info as always. Anything new you want to talk about with the report? You said the timing's a little different.
Yeah, we got changing our schedule around a little bit. And the reason is we never get weekends off. We work 7 days a week. So started doing, now that I've got a staff and it's not myself, I'm having problems getting everybody to work on the weekend. So we had to change our publication around a little bit. So we're doing the big forecast will come out on Friday noons, and the briefing, which we're going to roll into the scouting report and make it one just to simplify things, will be coming out on Tuesday.
Perfect. All right. Thanks, Matt. Have a great weekend. We'll see everybody next week. And be good. Be safe.
Thanks, guys.
Bye-bye.